Welcome to Winning Wall Street's Money. Please take this moment now with helping me. Click here, subscribe. Next, click this bell. Next, ensure to click all. This helps you receive a notification when I posted my next videos. Next, click this thumbs up button after every time you watch my video. This pushes it up in the engagement ratings and means it will be suggested to more people, therefore is likely to get more views to my YouTube channel. I really appreciate that. I also have a Patreon page. Click show more. Scroll down. This link here, my Patreon. Click on it. Select a membership. With this membership, you'll get access to all this information. Very good content. Thursday, July 1st, 08:23 a.m. New York time. Yesterday was the last trading day for the month of June. That ends at one quarter, and we're in a new quarter. Plus, we're halfway through the trading year now. Let's first look at the yields. Another name for yields are interest rates. Interest rates have a huge effect on the US dollar. Lower interest rates often help keep the US dollar low. So we're looking at the 30-year. Down here was the low of last year and higher prior years. But for this year here, we've been trending higher into this balance area. Zoom in. This balance area last month, the month of June, we broke below that balance area. So now we made a lower high, lower low. The momentum's down. It's retracing this trend. So this current candle is the start of the new month. But again, we're concerned with this one. Huge move down, keeping interest rates low for the 30-year. Now we're looking at the 10-year yield. And this duration here is 5 years, going back 5 years. For the 10-year, same thing, low of last year, broke up into this balance area. Well, this balance area, we also made a lower high, lower low than last month, but we're still inside this balance area. So that's telling me, by looking here, that this 10-year is stronger to the upside or less of a sell-off than what we see here on the 30-year that broke below. Got it? There is a difference, disconnect. We look at the 5-year. 5-year high was there, the low was last year, was there. And for this year, it's been trending up, just like the 10 and the 30-year. They've been trending up for the year. We're in this balance area, but this 5-year made a higher high, higher low, versus the 30 and 10 sold off. So there's a disconnect. The 5-year is stronger. Zoom in again. The 30-year here, top left, broke below the balance area and closed below it. Where the 10-year made a lower high, closing below the low of the prior month there, but it's still in a balance area, and the inverse in the 5-year. Yep. So the 5-year is more sensitive than the longer duration ones. And on the bottom are the bonds and treasuries. The 30-year bond trades inverse, so it's going higher. And we have the 10-year here in consolidation and the 5-year here. But again, let's look here at what's going on. 30-year yield, the 10-year yield, and the 5-year yield. Year to date, they are above their lows for the year. So the bigger picture is they're expecting interest rates to go higher at some point, even though for the current month, we sold off in the prior month for these two. Got it. Let's go on to look at the US dollar as well as Bitcoin. We're looking here at a 5-year duration. Each candle's a month. This far right candle is the start of a new month, but we're not concerned with that. We're looking at the candle ending for June. You can see over the last 5 years, a lot of whipsaw policies from the Federal Reserve, that the administration appoints over those 5 years have created a lot of whipsaw. Here, it's in a tighter range for the year of this new administration, tighter range. So we're not the low. The low is this yellow horizontal line, but this big green candle made a higher high, higher low than the prior month, but still not at the high for the year. So the bigger picture is the dollar is being kept low with the weakness of the keeping the interest rates low. Even though we had a stronger month here in a golfing candle, we're still below the high for the year, and plus below the high from the prior years. Got it? So some of this has to do with the policies of the US interest rates. And also US dollar, I'll remind you, is one of the 3 safe haven currencies. Same with Japanese yen and Swiss franc. We'll go over those in a moment. Looking at Bitcoin over several years. Well, last month, this yellow candle is the new month, July, but again, we're not concerned about that. Last month for June made a lower low, lower high. So way off the highs of the high of this year. And let's fix this here. You see what happened? We made a new low. Again, lower low, lower high from there. So we're almost at the low for the year. Yeah, Bitcoin, 180. Everybody that was buying the start of the year up here, that was holding on to it, is almost below zero if they bought here. Yeah, bad performing Bitcoin, bad performing cryptocurrency. Now let's look at the broader currencies. In the futures market, look at the currencies, the major ones against the US dollar. So these are futures. Symbols always start with /6. That lets you know this currency's in the future. These are not the currencies in the Forex. You can trade these in the Forex, but I'm showing you the futures market. This is the euro. The euro makes up the largest percentage of the US dollar index. So look at last month. It sold off, took out the low of that prior month, and still below the high of there. But the bigger picture is an consolidation for the year. It's got some whipsaw to it, but it's an consolidation, which is building a coil. Japanese yen, yeah, been trending. This is a trend, big difference than the euro. It's trending lower. So that means the US dollar is gaining against the yen. And last month, we took out the low of the prior right here. This was an inside candle, inside candle. We finally broke below them both, and we broke below that new low. And even now, the start of the new month, July, we're already at new low. So it's coming into what was a demand zone. This green horizontal line is a demand zone where buyers stepped in. We'll see what happens. They didn't hold there. They made it lower already. So safe haven currency is not where smart money's going. British pound also made a new high and then closed all the way back near the low of the prior month. That's not good leadership. Yeah, but still, it's an consolidation above the lows of beginning of the year. So it's an consolidation phase, building calls for the next breakout one way or the other. And the Canadian dollar, huge sell-off last month. For the start of the year, it was going good, making higher highs, higher lows, momentum to the upside. And then last month, huge reverse. Again, some policy of their country, of Canada, that helped do this. And now it looked like a bearish engulfing candle. So we want to expect it maybe to go lower. The Swiss franc, again, one of the 3 safe haven currencies. It sold off last month, where it did make a higher high, but took out then the low and sold off. So way below the highs. Here was the high at the beginning of the year and selling off. Won't expect it to go lower. And the Australian dollar last month, June, broke below this consolidation area. So now it's in a sell-off phase. Yep, the momentum's down. A lot of supply was up here. I mean, sellers were up there. Small trading bodies, large tails, and then finally broke below it. So one expects it to go lower. And it's at record low for the year. Yep, beginning of the year, here it's low. Huge effect what's going on. Let's look at what else affects the dollar. The dollar affects commodities. So let's look at some commodities. We'll look at energy and metal. Each candle's a month. Look at crude oil. This is the new month, already made it a high, but we're looking there last month, outstanding. Wow, huge move up. So crude oil is very bullish. That's where we had the breakout last month, right here for June, broke out of this consolidation. Record highs for the year, but we're still not at the all-time highs over the last 5 years. This is a 5-year duration, and we're not at there. That was the high during the last 5 years, but we're gunning up there, trading above $75 a barrel now. Again, part of it has to do with the weakness of the US dollar, which has an effect from the yields, interest rates. And natural gas, all-time new high for the year last month, right into this midpoint of this huge candle. So it went there, this candle, 50% retracement, that's where it ran up to. All-time new high natural gas for this year, very strong. Let's look at metals, gold. Here was the high of last year of gold, zoom in, and here's what gold did this year. Yep, and this is the high of gold this year, this yellow horizontal line. So below the high of this year, and the low this year was right here, which was a demand zone. But gold took a big sell-off for the month of June. And then this could be like a demand zone. We'll see what happens. If we don't break the low of last month this year, this new month of July, if we don't break the low, well, then we might be building consolidation for a coil to break up to the upside more. So I'll be watching this closely for buyers on a faster time frame down here. It's demand zone opportunity. If you're bullish, to reload down here. Silver as well, strong like gold. Yeah, very strong. Well, we did a consolidation for the prior 2 months. It's way off the lows, strong. And platinum had a huge sell-off last month. Yeah, we had consolidation there, weakness, still above the lows of this year, but just a huge move down, broke below the consolidation. We're 1050 air range price level. Demands on buyers have stepped in there. And copper, also last month, huge sell-off. For the beginning of the year, the momentum was to the upside, strong like bull. And then we sold off last month, huge sell-off. So it might have been profit taking, because again, the dollar has been weak. So there's multiple other reasons that copper has sold off, not just because of the currency value. And let's go through some agricultural products. Again, commodities, agriculturals, weaker dollar, higher commodities. So looking at corn, huge trading range, the largest trading range I've seen for years. So corn made a lower high, lower low. Huge move down. And wheat, here we are, that green candle, made a lower low, lower high, but in a consolidation phase still. So not expecting to pull back much more. And soybean futures, also huge red candle here, sell off, lower high, lower low, and made a new low for the year. That was originally the low for the year, and there it went back up, huge spike. And lumber, wow. So here is lumber here, the high of the year, and for the month we gapped down, trading below 1,000 down here. Huge move. So what a big return. And that was a bearish pin bar, huge tail, small body, clear single. That was the topping of the trend. Live cattle now. Yep, there we go. It's inside consolidation. We made a higher high, higher low. We're in the consolidation phase. And feeder cattle made a higher high for the year and a higher low. So the momentum was to the upside. And look at this. That was the prior high several years ago, this yellow horizontal line, and we tested it and rejected it, went lower. So now it's the supply zone up there, sellers were up there. Lean hog, all-time new high for the year, and then sold off, very bearish occurring up there, huge trading range for the month. If you like the information I shared, join my Patreon page. Plus, please click like and subscribe. Thank you, as always, for spending just a little bit of your time with me. Let me know what you thought about this video, and please let me know what you want to see next. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel. By going below and clicking on my PayPal link, you can leave a small tip. If you don't want to share financial support, no problem. Just click the like and subscribe.